Good afternoon, traders and investors. Will back here with another one, coming to you with a Friday market recap. Hope everybody had a beautiful day. And in today's markets, guys, well, we had a bunch of news, and it all started last night with Israel's retaliation attack on Iran. Israel obviously launching an airstrike against Iran defense systems and military bases, and that caused a bunch of turmoil in the futures markets last night. As I was recording the video, you saw that NASDAQ and S&P futures were down about 1.5 and 1.8% respectively on the NASDAQ, and that fear kind of continued into today. Today, as a matter of fact, we didn't really get much in terms of economic news, in terms of jobs data, economy data, or inflation data. It was really just a persistent amount of fear coming from those geopolitical headlines we got last night, and as well some potential fear in terms of semiconductor growth, aka your AI plays have all pretty much had heavy downside over the course of the day, and that was expressed by a 4.5% loss on your semiconductor industry, largely led down by some of your most popular names. Take a look at ARM. ARM was one of the favorite trades. That one was down a hefty 17% on the day. Another popular trade over the course of this last quarter was SMCI. This one was down 23%. And your industry leader for the AI plays, NVIDIA, even NVIDIA, guys, down about 10% on the day. However, there was some other rotation in the markets in the names of financials and healthcare. And we've been talking about this on the channel, guys, how financials and healthcare kind of led the downside first. And then QQQ has kind of played catch up. Now that financials and healthcare have found somewhat of a bottom and have started their little bit of a trend to the upside, now we can see QQ really coming heavily down. And that obviously led the SPY to be maintained at 0.87% to the downside. If financials and healthcare would have also been red today, guys, you would have probably seen a minus 2% day on the SPY as well. So a lot of things happened today, guys. However, it is opening up in these conditions of pretty much maximum fear and almost, dare I say, retail capitulation. That is going to open up the doors for one of my favorite trades that I will show you later on in the video. That is first daily oversold conditions after an all-time high. Usually it is a very, very juicy bounce play. Now, it's not to be saying that we're going to make a full recovery from those daily oversold conditions, but can we get a very juicy bounce off of some oversold conditions and then potentially roll over thereafter? Yes, but there is this bounce trade coming, and that will most likely occur over the course of the next week. So we'll get into that in today's video. In other news, we also had some earnings today that I want to cover on the channel. Those are going to be American Express earnings, and the company did amazingly well. So we'll cover those first. Second, we're going to cover our major technical analysis rundown in terms of indexes and big tech names. And lastly, go over my portfolio and see how I wrapped up trading during the week. And key little hint, guys, I am changing up the trading strategy ever so slightly for the next 2-3 weeks to play volatility and to play earnings. So it's going to be a little bit of taking on additional risk, but the rewards are going to be fairly good indeed if we can perform this adequately, which I really do think we are going to be able to do. So without further ado, guys, let's get right into today's video. So SPY down 0.87%, QQ down 2.07%, and the damage, as I said before, guys, was largely done by your semiconductors. Take a look here. Absolute bloodbath in semiconductors here. But however, as I've been saying, it is starting to open up a few key trades that I really like. So we'll get into that when we cover these semiconductors later on in the video. As a whole, though, big tech largely sliding to the downside. However, it was not all bad in the markets. As I said, the rest of the market did a very good job in holding up gains today, right? We had some healthy rotation. Financials did a very decent job. Some of the major banks coming back. American Express earnings obviously helped the credit card portion of the market as well. And even your healthcare names, for a large portion of them, were considerably up on the day. The bottom half of the market participating as well with some nice little gains. Really, most of the damage, guys, was done by big tech and your semiconductors. But we were forecasting that on the channel here, guys, that if financials and healthcare dropped first, while QQQ stayed relatively muted, it would then provide an opportunity for financials and healthcare to recover, and then that allows QQQ to drop, and the SPY doesn't get impacted as much as if all of your sectors are dropping at the same time. So there was a light at the end of the tunnel. Now, in terms of your one-day relative, guys, you can see that even better, the half of the market really divided right here. Utilities, energy, financials, and defensives all performing relatively well on the day. The ones to the downside, consumer cyclical, communication services led by Google and Meta, of course. And then to the downside, obviously technology, which encompasses semiconductors as well. So before we get into the technical analysis portion of the video, guys, I want to go through one of the company earnings that we had today. We're going to cover American Express right away. And here's your earnings preview for next week. Next week is probably the most important week of earnings of this entire season, right? And it starts as early as Tuesday. We have Tesla, we have Visa, we have UPS, a couple other big companies, right? Pepsi, of course, Texas Instruments, very big names, Spotify. On Wednesday, we're going to have Boeing, see how they're going to recover from their disaster. We have Meta, IBM, Chipotle, another big one, ServiceNow, Lam Research, another one of your heavy semiconductor plays as well. Lam Research, LRCX right down here. And Boston Scientific for your robotics plays. Then on Thursday, we have more huge tech earnings. The Microsoft, Alphabet, Google, right? Intel. We also have Snapchat, Roku, a couple more. So you can see, guys, very, very big earnings. Caterpillar. Next week is going to be a very, very big week. And then we wrap it up on Friday with one of my favorite names in healthcare, AbbVie. And we also have a few other healthcare names to be reporting as well as some oil companies. So next week is going to be a very interesting week, guys. And I am looking to absolutely crush this next week with all of these company earnings. I will, contrary to the past, I will be playing earnings. And the logic behind that is very simple, guys. In markets right now, where we have increased volatility, take a look at your VIX. VIX is sitting about 1820. We haven't seen these levels since last October. What does that do for option premiums? It jacks option premiums up through the roof pretty much, which allows us to get even lower strikes. If I'm looking to write short puts prior to earnings, before, if I was to go 2 standard deviations away from the expected move, so if the expected move is something like 8% on Netflix, I would usually go for 16% lower, but it didn't provide that much premium. Now, if you go 2 standard deviations, even more than 2.5 times away from the expected move, you are going to get handsomely rewarded. So what it does, it allows us to take even lower strikes. And this is why I'm interested in playing earnings, guys. But they will all be one-day trades, getting into the trade late afternoon before earnings and exiting the following morning, regardless of the circumstances. So that is going to be a strategy, and I'll keep you guys posted on that. When we take a look at my portfolio at the end of the video, you'll see that I reworked pretty much the entire portfolio at this point, as I've been saying I was potentially going to do over the course of this week, leading into our semiconductor earnings. And I'm going to obviously cover this newer, it's not really a new strategy, it's just a slight modification of the put wheel to favor a bit more volatility and a bit more risk in these current environments, right? We're going to look to buy very juicy levels, right? Puts at very, very extremely attractive levels while we're in oversold conditions. It is a perfect setup here, guys, to be able to generate some juicy premium. Now, obviously, we can't do that when markets are at all-time highs and volatility is low. So now that everything is really dumping hard coming into oversold conditions, if we're able to write 2.5 times the expected move below the current stock price, guys, it's going to open up such juicy trades. And I'll show you a couple of the ones that I took yesterday leading into Netflix earnings and American Express as well, just to illustrate the purpose of the example. So let's get into our earnings right away here, guys, right? So American Express first. American Express with some beautiful earnings. So take a look at this. EPS beat by about 12.71%, and the revenue did beat by about 0.05%. Double beat as a whole, and a very nice outlook on guidance as well for American Express. So what exactly happened for them to beat earnings this much? Well, the criticism of this company leading into earnings was, are they putting enough money away for potential credit losses? Obviously, a lot of the headlines in the past couple of weeks have been, well, consumers are running a lot of debt right now. Credit card debt is at all-time highs. So now we want to see from the credit card issuers, is that indeed the case? And is it a problem? So let's address those two questions right now. American Express on the day had a very good day, 6.23%, which is, for all intents and purposes, an all-time high for them. Chart looking extremely strong. Let's take a look at those earnings right away. American Express Q1 results. Take a look, guys. Take a look at this net income number. Net income, 34% increase from the comparable quarter, right? Q1 of 2023. That is absolutely fantastic increases in net income. As a matter of fact, that is a 15.5% net income from their total revenues, which is one of American Express's best quarters in recent memory. Take a look here, guys. You can see your quarterly net income, the number at the bottom of the screen, right? You can see we have some 10%, 11%, 12, 13, even 14 sometimes of net margins in the last 5 quarters. Well, this quarter, an absolute blowout coming in at 15.4% net income. Very good. 6-7% increase in total billed business. So how much money people spent on their credit cards, how much American Express generated in revenue from all those billings was up 11% year over year when measuring with the first quarter of 2023. Extremely strong quarter for them. Let's take a look at what the CEO had to say. So we have started off 2024 strong, with our first quarter results reflecting the positive trends we have seen in our business in the last several years. We continue to attract high spending, high credit quality customers to the franchise, with new card acquisitions accelerating sequentially to 3.4 million in the quarter. Another amazing quarter in terms of net new users. Our fee-based products accounted for around 70% of the new account acquisitions we saw in the quarter. Fee-based products, guys, you obviously know that credit card companies have a few different offerings. A lot of them issue credit cards with no annual fees, but American Express, they target more premium consumers. This is why I like this credit card company, in relation to MasterCard and Visa, because their consumers are more higher end consumers, and the fees that they pay for some of these cards can range between $500 to $1,000. So those are what they're talking about when they reference fee-based products. And we continue to see strong demand from millennial and Gen Z consumers, who accounted for over 60% of new consumer account acquisitions globally. Our credit metrics remain best in class. So millennials and Gen Z, American Express has done an amazing job of marketing, guys, on social media to the younger demographic. They're trying to attract the new, young, big money players in the space and getting them on board with a ton of rewards, because they know that if they do a good job, well, then these influencers on social media will promote the cards to everybody else. So they're basically kind of relying on some organic marketing, and it's working very, very well for the company. They started this roughly 2 years ago when they rebranded their themselves to cater to a younger crowd as a whole. And you can see the dividends are now paying highly off from that business decision. Now, let's get into some of their numbers, guys, and you'll see that some of these numbers are absolutely amazing, especially in terms of the credit quality of the company. So total revenues, we can see here, we already ran over this, 11% year over year. Very, very good. Net income, obviously, we referenced that 34% boost in net income. Take a look at your EPS gain here, 39% in EPS gain. American Express has no problems growing EPS. Take a look at this beautiful growth curve on EPS through 2026, and also your beautiful growth in your revenue curve through 2026 as well. So really doesn't have a problem in any of those aspects whatsoever. They also have bought back a considerable amount of stock over the past year, talking about 3% of the outstanding float, which is another good business decision. Now, take a look at total billed business and network volumes. You can see that this has been fairly constant as a whole. Billed business usually sitting around that $370 billion mark. Total network volume is also substantially high, so they're really not losing much, but we'd like to see this start to get on a nice little uptrend. The company guided that this uptrend will resume as early as late 2024 and coming into 2025. So hopefully that is helpful right there. In terms of U.S. consumer services billed business, that as well is relatively on par with your last 5 quarters. So really no change there. Where it really did change here, guys, is in the segments of the business. You can see year over year, very good millennials and Gen Z. 15% increase here year over year. Extremely strong numbers from them. And the rest of the consumer metrics, right, not as strong. So they're really doing a great job of monetizing the customer base that they're going after the most with their marketing. Now let's come down to a couple more slides here. So here we have worldwide total loans and card member receivables. So very, very decent, guys. You can see that there's really not much in terms of expansion of total loans outstanding and card member receivables, which has actually been trending down. So it means that American Express customers as a whole have been holding less money on their cards, as a matter of fact, and have less loans outstanding, right? Even though the business is growing. It just goes to show you that the people that have access to American Express cards are not your clients that tend to run very high credit lines that they don't pay them back. So these are very, very healthy numbers, guys. Now take a look at this. This leads into the next slide, right? Card member loans and card member receivables credit metrics. 30 plus days past due. I remember showing you guys this exact slide last quarter on American Express, and it really hasn't changed much. You can see that 30 days past due. How many of their clients are 30 days past due? Prior to the pandemic, it was 1.5% of all of their clients that were 30 days past due. Since then, you can see even now when supposedly credit debt is running ridiculously high, right? That is the consensus right now. Well, it's not the case for American Express because, as I said, American Express usually caters to the higher credit individuals and higher net worth individuals. Take a look at this. Only 1.3% of all clients are 30 plus days past due, which is well below your pre-pandemic levels. Net write-offs. So these are all the people that cannot pay at all. They just don't have any money to pay, and the company is forced to write off the debt, meaning they just take the loss. So how many of their clients do they have to just write off as a loss? Well, you can see here that we're still below, although we're elevated from 2023 levels, we are still roughly below and in line with pre-pandemic levels. So I wouldn't say that there's any emergency here illustrated by American Express's clients in terms of being too underwater on credit card debt. Now, here's your total provision. This is the amount of money the company puts aside for all of these people who currently are potentially, some of their worst clients that they may have to write off and take the loss on, that credit debt per se. So you can see total provisions. If American Express thought that credit would be a heavy problem, well, you would see this number go way up. But they're really not putting aside more than they've had in prior quarters. You can see that their total provisions right here are sitting about $1.3 billion right now. And that is really standard with what we've had in the past. As a matter of fact, it's lower than our Q4 number. So this just goes to show, guys, that the company is fairly confident in its clients' credit worthiness. Now, a few more slides. Let's just go over a few more slides right here that I want to show you. Revenue performance. So here is the segments of their different businesses. And you can see, guys, that for the most part, they've all been up, especially their larger lines of business. So discount revenue. Discount revenue is the amount of fees. Whenever you swipe the card, there's always a tiny little fee every single transaction that goes back to American Express. You can see here that that is 50% of their revenue, 53% of their revenue, and that was up 5% year over year. Very good. Just goes to show that people are spending more. Yes, American Express did increase their transaction fee ever so slightly over the past year, but they did not increase it 5%. The rest of this is coming from organic amount of growth, which just people spending more or people doing more transactions with their American Express cards. Net card fees, those are obviously the card fees that, when you have a $500 per year credit card or a $700 per year credit card in terms of the fees, well, you can see net card fees, that was increasing 15% year over year. Smaller portion of their business, only about 12%. Service fees and other revenues, those are when you go on American Express travel rewards sites and stuff like that. And you pay a portion in points, but then you can also pay, let's say you don't have enough points, you can pay the rest in actual dollars. So that's just pretty much the service fees and other revenues from those travel and experiences that they provide on the American Express rewards site. Process revenue, we won't get into that. It's not that it's slightly complicated, but it's just such a tiny portion of their business that it's kind of negligible at this point. Net interest income here, well, that's obviously the money that they make from interest on anybody who's past due, right? And you can see that's 24% of their business, and that was up a heavy 26%. Obviously a byproduct of increasing rates. American Express used to have a standard rate of about 21% on an annualized basis for interest payments, right, to the company. But now they're roughly around 26% for average card holders, right? So that's why that number has slightly uptick as a whole. So all in all, guys, very, very, very healthy. Really nothing bad to see in this entire report whatsoever. And I just want to bring you down here, guys, to one of the last slides, which is your guidance. So the guidance for 2024, very healthy, 9 to 11% revenue growth. That is standard with American Express in the past couple of years. Nice to see double-digit growth remains. And look at your EPS. EPS growth between 13 and 17% for the next year, which is extremely, extremely strong here, guys. So American Express really with a pristine, absolutely pristine report. Really cannot pick apart this report any which way. It is extremely healthy. The only one thing that we didn't go over is the financial statements, but I'm kind of going to save those. I'm not going to do those today on American Express just because the company, there's really nothing fancy to see. We already saw most of it in the slides in terms of the revenue breakdown. Net margins have improved, right? So obviously they're doing a great job at controlling expenses. The only thing that I didn't show you guys is their balance sheet position. So do they have a healthy amount of cash in relation to their debt? And we can see here that, as of our most recent quarter, that stood at about $49 billion in terms of debt, and they did have about $46 billion in cash. Well, that has now gotten even better over this past quarter. Their total debt is currently still at about $49 billion, but their cash and cash equivalents now is about $52 billion. So now they do have more cash than they do have debt. So their balance sheet position is relatively healthy, and the company does generate a decent amount of free cash flow as well. So that is very, very interesting indeed. So if we take their EPS growth in standard, guys, I really apologize. I kind of forgot. I'm not going to lie. I didn't do the valuation right away. So if you give me a few minutes, we can probably go through that together in terms of the valuation. I had already written these growth metrics down for the company. So let's say they're set to grow at around 11% EPS. Let's just go in here and let's do some very quick little math here. Let's take their 2024 end EPS, which is about 12.9, right? So 12.9. So we're going to divide their current share price, 231. So 231 divided by 12.9, that gives them a forward PE of 17.9, right? Which is not that egregious for a company like this. It's well undervalued in relation to MasterCard and Visa. And if we divide this by their EPS growth rate over the next couple of years, that gives us a PEG ratio of 1.62. That is very, very good here, guys. Really nothing bad to say about the company. If I can adjust this right, so let's do the 2024 forward PEG, just so everybody can understand. It's going to be around 1.62, and the 2024 forward PEG, forward PE ratio, what did we say? That was about 17, right? So very, very, very healthy growth metrics for the company. Even if they're at the all-time high, they're really not that overvalued. They're actually considerably cheap in relation to MasterCard and Visa, is this company, just because it's growing so healthily. In terms of the technicals here, guys, well, you can see it's an obvious, very obvious weekly uptrend, and we're on to leg number 3. However, if for ever which reason this stock as well gets plagued by overall market weakness and starts really giving back some of their gains, well, American Express, guys, I'll tell you front and center, I want this stock. The cheapest I'm willing to, the most expensive I'm willing to pay for this stock is anywhere at about between 210 and 205, but I really want to see it back around the 200 mark. The 200 mark would just give us a very beautiful breakout retest of this lower area and then potentially run further on later in the year. But I'm not really sure if we're actually going to get that discount as a whole. The company is just too solid to begin with, right? The first area I'd be targeting, if I didn't have a position in American Express and I really wanted to be exposed over the next couple of years, I would throw a first order right down here at around 215, which is our prior lows before earnings. And then as the earnings season advances, if we see further and further declines in overall stock prices as a whole over the next 3, 4, 5, 6 weeks potentially, well, that's when I'll be adding a little bit more. I really don't think, even if the market completely sells off, guys, I really don't think we're going to see prices under $200 anytime soon. Obviously, it can happen, but with such fantastic earnings and such fantastic growth metrics, and being a defensive company in times of turbulent times right now, to say the least, this company is just so strong. So I absolutely love this company. I still have some long-term shares, guys. I was preaching this one on the channel. I hope there were a few of you that were able to get it last year when we started the channel. I had mentioned back in May and also back in October how beautiful of a buying opportunity this company was in this lower range. Hopefully a few of you were able to pick those lows right there. And if you did, you'd be up a very healthy 56% on an otherwise very, very conservative stock, right? It's not really a growth company. It's more of a value/defensive company. Amazing free cash flows, very decent balance sheet position, and just amazing growth. And their client base, guys, their client base is exactly what you want in times of potential recession talks. They cater, most of their clients, guys, are higher net worth clients. And you guys know higher net worth clients really don't stop spending money that much throughout a recession, right? If you're a multimillionaire, you don't really care what the price of groceries are right now, right? Whether bread is $3 or $4.50, you don't really care. I mean, obviously, a lot of other people do care, but American Express clients, for the most, are in that top tier of the tax bracket. So very nice earnings report from the company itself. We will continue to see how the evolution of credit card companies evolves. Obviously, next week we do have Visa, and the very week after we do have MasterCard as well. Let me just check on MasterCard's earnings real quick. Is that next week? No, 1st of May, so pretty much the same week as Apple. So very, very decent report from them. Now that the earnings are complete, guys, let's go over our technical analysis on the SPY. And you will see right here, guys, that, well, the SPY down considerably, right? Pretty much a waterfall drop. Before we do some technical analysis, I want to read you the context, right? The amount of fear that's in the markets right now. Obviously, the fear and greed index, guys, is pretty much bright red right now. And it does seem like the sky is falling. But, guys, it's better to do it quickly than slowly, in my opinion, right? We have to get the froth out of the market, get people fearful, get people on their toes very quickly, because that's when the market sentiment changes. It changes from bullishness to absolute capitulation. And you saw it best, guys. You know, I'll just give NVIDIA as an example. NVIDIA, people were saying this is such a great buying opportunity because we're going up to 1,000. Easy buying opportunity at $900 to go up to 1,000. And now that NVIDIA had a 10% drop on the day today, I was looking through, different websites and whatnot, such as Reddit, such as StockTwits, and the sentiment has completely changed. People that wanted to buy over here no longer even want to buy even at 760 right now. The sentiment really flipped on a dime after today. And that's what you want to see here, guys, right? You want to see the sentiment shift. You want to see people capitulate because it will just open up very juicy buying opportunities for us. All of these are just very healthy monthly consolidation as a whole, guys, but it just goes to show a lot of people's focus is on the day-to-day activities of the market, and they fail to have the bird's eye view, right? So let's read the article real quick just to give you guys a sentiment of where the market is at right now. NASDAQ 100 notches the worst day since late 2023, worst week since 2022 as AI-driven chipmakers tumble. Fed can take the rest of the year off. Very bold headlines, right? The tech-heavy NASDAQ 100 index closed Friday's session down 2.1%, marking the worst day since late October 2023 and the fourth consecutive week of declines, a negative streak not seen since May of 2022. On a weekly basis, the NASDAQ 100 tumbled 5.3%, notching its worst performance since October 2022. It was a very big drop. Take a look at this drop here, guys. The worst week in almost 2 years at this point. What happened to tech stocks? Friday's downturn echoes an already pessimistic sentiment surrounding U.S. tech stocks. Notice, pessimistic sentiment. Delays in interest rate cuts, mixed guidance from corporate earnings, and growing geopolitical risks have formed a detrimental environment for tech companies. Have any of the fundamentals of these businesses drastically changed? No. Semiconductors, guys, they guided in the previous quarter that this quarter would be a little bit slow for them, but they're expecting a good recapture of that in late 2022. So these sell-offs are largely blown out of proportion because of everything else going on. During the week, Federal Reserve Chair Jerome Powell dismissed the possibility of rate cuts, citing a lack of confidence in the pace of disinflation. Renowned veteran Wall Street investor Ed Yardeni said the Fed is in no rush to lower interest rates. They could literally afford to take the rest of the year off, meaning no rate cuts at all. And the market is pricing in all of these fears very, very quickly. Israel-Iran fears, they're pricing them in extremely quickly. AI narrative slowdown, pricing that in excessively quickly, right? And a downturn in company earnings. We've seen that from the banks. We've seen that from semiconductor companies over the course of this week as well, starting to price in the downside extremely, extremely quickly. The market is very efficient in that respect. Adding to that, what really tanked tech stocks this week has been the broad-based losses within the semiconductor industry, triggered by weaker guidance from ASML and Taiwan Semiconductors. We literally forecasted this on the channel on the Monday video, guys, right? So even high-performing NVIDIA was not immune to the downturn, plummeting 13%, its most significant decline since August 2022. Compounding the already complex situation were geopolitical tensions, with Israel responding to Iranian attacks within a week. Israel's limited response eased the possibility of further escalation. Now, As the week drew to a close, investors exhibited a lack of confidence in expanding their exposure to equity risks, right? So the breadth of the tech market appears exceedingly weak, with only 22% of stocks trading above the 50-day moving average, the lowest level since late October 2023. So now that we're hitting all of these historical points of data, right? Worst week since X, worst day since X, geopolitical tensions, the AI narrative completely falling apart. People saying the bubble has finally popped, right? There was no bubble, guys. All of these stocks, they were trading a little bit rich, but they were nowhere near trading the valuations of the 2000s tech bubble. Let's not lie to each other, right? Very, very, very far off. So it's just everybody now. It's very funny. In the span of literally a week and a half, we had everybody claiming 5,700 on the S&Ps, buy everything. It's just a temporary little correction area right here, right? And in the span of a week and a half, everybody has literally pivoted to complete extreme fear and capitulation at this point. No industry is safe. The AI narrative is apparently finished, right? Even though there will be advancements in AI for the next 6-7 years, and all these companies are going to be growing revenues and EPS heavily over the next 6-7 years, nobody cares right now. It's just a race to the exits. These are the times where you want to be building your shopping list to buy. If people want to panic sell their shares to you at very good prices, then definitely pick them up here, guys. But in my opinion, the fear is not done yet. Now, the temporary weekly sell-off, that could potentially be coming to an end. We're going to take a look at this very shortly. Could be getting a bounce, but we're just going to be expecting for a lower high and maybe lower low continuation. So if I'm saying buy the dips, we can start buying the dips, yes, but go light, guys. We still have a very big week of earnings next week. And if this week was any indication of what next week holds, I'm pretty sure, guys, unless a lot of these companies justify the gains that they've had above the SPY this year. So keep in mind, as of last week, the SPY was up about 5% year to date. Now it's up about 3.5%, 4% year to date. However, take a look at how much this entire market has been up year to date, right? NVIDIA still up 53% year to date. A lot of your semiconductors industries, if you see companies here that are up more than the S&P 500 on a year to date basis, they will have to justify in this earnings call that's in this earnings season that's coming up why they have these gains and can these gains continue. So it's a question of pretty much at this point, if the companies don't have absolutely perfect earnings, talking about double beats on revenue and EPS for this quarter and either on par guidance or better guidance than anticipated, they will drop. If these companies have good EPS, good revenue, but softer than expected guidance, they will drop, guys. That is just how it's going to be in the course of this earnings season. You saw it with the banks last week. You saw it with semiconductors, even though semiconductors literally guided for this exact scenario. Last quarter, the market did not care. It's as if the market forgot all about it. These semiconductor companies did very, very well, and still the market was like, ooh, you guys are saying slow down? Well, let me just drop your stocks 5, 6, 7, 8, 10%, right? They already guided for this, guys. So this is going to be a case in point in this earnings cycle, whereby if it's not perfect, most likely they will be sending it lower, which is why I think we are going to be a little bit lower. But this trade right here is going to offer a very juicy buying opportunity, in my opinion. Let's get into the reasons why. I know I apologize. I know I'm a bit all over the place, guys, but I just want to get all these concepts down so we can really navigate through this relatively challenging landscape, right? We've seen this landscape before here, guys. Nothing new here either. We saw it last fall as of most recently. So on the SPY, we are still in the context of this daily downtrend. However, we are now approaching daily oversold conditions, but not only daily oversold conditions. Our first daily oversold conditions after making new all-time highs, usually this is a very high probability trade. Is it going to be a trade that does this? No, we are always looking for the lower high. Why? Because the daily bears are in control of this daily downtrend. The expectation is setting the lower high, right? Obviously, we have to measure the size of the bounce, and then it'll give the bulls the best chance. The higher the bounce, the better chance the bulls have at recapturing the daily uptrend, right? But we are expecting a lower high. Whether the lower high is up here or whether it's all the way up here, that is anybody's guess. We'll see what the market does, but we are expecting the bounce to play out soon. So it could be a very juicy opportunity, not only in SPY and NASDAQ futures or options if you want to take that risk, very high probability trade. Also, though, however, we are going to get those opportunities in individual companies. So let me show you this, and you can apply this to individual names as well using these very easy principles. Look at your current levels of RSIs, whether you're looking at overall indexes or whether you're looking at individual names. Look for first daily oversold conditions after an all-time high. You want to go back in history? Let's go take a look, guys. So your previous all-time highs in 2021, all-time highs were set right here. When did we get daily oversold conditions? Right over here. You can see that right here, first daily oversold conditions. This candle right here. What happened thereafter? We got a very juicy bounce of about 6%. Did we just thereafter set the lower high and roll over? Yes, because the bulls were in control, right? We're just expecting the bounce play. This is just for a bounce play here, guys. Not trying to predict the absolute reversal bottom of these markets to new all-time highs. Just for a bounce. Take a look at another one, right? Well, COVID is a bit of an outlier, so we'll skip over that one. But let's take a look at this one as well, right? Coming off 2018. 2018 markets, these were all-time highs. First daily oversold conditions, we came down into them extremely aggressively right here. And what happened? We got a nice little bounce of about 3% before rolling over. We hit oversold conditions again for the second time, got a nice little bounce. Let's take a look at another one, right? Here, another one. January 2018. All-time high conditions, rolling over into first daily oversold after an all-time high. Take a look at this trade. Yep, you guessed it. We did have a juicy bounce. Did it roll over a couple days later and give us another bounce opportunity? Yes, but you can see how the markets react in these circumstances, right? So we're going to take one more, let's say one more from previous all-time highs, right? So let's just go back in time. You can do this on individual names as well. You'll see that it usually holds up. These current conditions right here were also all-time highs. This is all the way back in 2016. And you can see what happened right here, right? 2016 all-time highs. Where do we get first daily oversold conditions? Right down here. And what happened? Got a nice little bounce, right? So this is the exact same trade that I will be looking to make most likely in the first few days of trading next week. Obviously, earnings in the mix throws a little bit additional risk and a little bit additional volatility into it, right? But that is the nature of the trade that we're looking for. We are looking for daily oversold. If you can couple that with short-term oversold as well, 4-hour oversold conditions crushed, 1 hour oversold conditions as well crushed. So we're going to be looking for next week the bulls to regain the hourly trend change. When you see the hourly engulfing move like this and a retest potentially, this is the trade location. Your stop loss goes under the lows here. If you want to zoom in, right, this inter-time frame analysis is crucial right now. If you want to zoom in, this is going to be the hourly, right? If you want to know when the daily bounce is coming, you have to get the hourly trend change. So this is the hourly trend change. How do you know that this is the bottom of your hourly dip? For that trend change, go down to the 15-minute chart. When you can see the 15-minute chart right here, because your 15-minute is going to be in a downtrend. As soon as you see the 15-minute chart do exactly what we saw in the hourly, that's how you know now it's time to take the trade. We enter here whenever that 15-minute reversal is. That'll be your hourly high or low, and that will also be most likely your daily lows. That is the play that we're going for here, guys. It is the reversal play, right? So very high probability trade, expecting the bounce soon. That being said, daily bears obviously in full control of this move, and we're coming down into this area of support right here, which is going to be roughly your 493 all the way down to roughly, it goes a little bit lower, 485 to 493, this whole area right there. We are starting to expect somewhat of a bounce play on SPY. So keep a close eye on that. On Monday, if we're red as well, it'll just accentuate these oversold conditions, but watch for your hourly bounce into an hourly trend change, guys. It is usually a very high probability trade if you're interested in taking some short-term trades like that. In terms of the long form, Well, the long form guys, you guys already know the drill. We're going to need for that daily bounce. And then when the daily bounce happens, we need to measure how high is the size of the bounce in relation to 520. Get me as high as possible to give the bulls a chance at resetting this daily trend. If the bounce is too weak, we're going to be using this whole level 510 down to 505, this green box right here as resistance. We have the moving averages there as resistance. Would not be surprised if we get rejected, and then it'll be up to the bulls to protect these lows or fall the risk of rolling over and continuing in weekly consolidation. Moving on to QQQ. So we're going to do the rest of these quickly now that I've explained the trade principles. QQQ, same concept. First, daily oversold conditions after an all-time high. Where have we previously had that? We did not even have that in October, as a matter of fact. So let's take a look at the sell-off that started in 2022, and you'll see that even best. All-time highs, first daily oversold conditions, same thing as SPY pretty much starting here. Nice little bounce, and you can go back in time and do the same thing. Look at this one in 2021, right? This was the all-time high at the point in 2021. Nice little downturn right here. First daily oversold conditions on QQQ. Yep, you guessed it. Nice bounce, right? So those are the types of setups that we're going for. Very high probability short-term swing trades, right? Just targeting. We're trying to pick some of these lows and targeting the lower highs because the lower highs are inevitable. Just depends how high are the lower highs going to be. Are they going to be weak? Are they going to be strong? That will let us know whether or not the bulls are ready to regain some control or whether or not we are due for further weekly consolidation. So QQQ, bears in full short-term control right now. Any bounce, as soon as the bounce happens, right, we're coming in hot to our previous areas of all-time highs, guys. QQQ is giving back a lot this week. Take a look at this week, 5.4% to the downside. You guys know we have to go back to 2022 to find a drop like that. In terms of your year-to-date gains, guys, QQQ now year-to-date is only up 2.17%, literally erasing months of gains in literally the past 2 weeks. So very unfortunate, but it is going to provide us a juicy bounce play opportunity. The overall big support zone, guys, is coming up soon, 405 down to about 385, and that will be a top to bottom correction of anywhere between 10 and 13%, which is literally exactly what we got last fall when we sold off for the exact same reasons. Israel and Palestine getting into the conflict, right? October the 7th, that was the tail end of the sell-off. What started the sell-off? Inflation higher for longer concerns, or rather, and obviously rate cuts being pushed further into 2024. I'll remind you, when this started, right, before this started, the expectations for the first rate cut were January or February of 2024. And when inflation started being higher than expected, they said, you know what, those are off the table. Now we're not even thinking about cutting rates. And then everybody got spooked, and then they thought the Fed was going to push them way into the future, which they did. But eventually those fears all alleviated, and we resumed the bull market. So hopefully that's educational for you guys, right? Just watching for this daily bounce. As soon as we start getting that bounce underway, we're going to watch for the size of the bounce. We'll take this one at a time, and we'll obviously cover the bounce scenario when it starts to happen. Now, XLF financials, coming ahead of QQQ, right? So as I was saying, these dropped a lot sooner than QQQ did. QQQ really only started dropping this past week, whereas XLF Financials really has been dropping for 2 weeks in a row at this point. Nice to see financials finally a bounce underway. So guys, this is your bounce scenario. Daily downtrend now into a daily bounce. How much of this bounce have the bulls taken back so far? Not good enough yet. Only 38.2% of the move. Need to see at least 50% to give the bulls a chance at creating enough space to be able to set the higher low to recapture this daily uptrend. As of now, we have not created enough space, guys, and we're still dealing with overhead resistance. We have our moving averages right here as resistance, and we do have our previous all-time high red box region of resistance. That's going to be acting against the bulls as well. So we need to measure how long does this bounce last, and you will know when this bounce is finished when they lose the hourly trend. That's when we will measure the total size of the bounce and gauge whether or not the bulls have created enough space to be able to set the higher low into daily uptrend, or if ever we're due for another daily leg down, which will just once again perpetuate this mode of weekly consolidation. The weekly bulls still well in control. Anything above 37, just looking for a weekly higher low for potential trend continuation. Nice rejections here off of the 12 weekly EMA. So I wouldn't count your bulls out on financials just yet. Moving on to healthcare now. Healthcare also with a nice little rebound day today, 0.38% to the upside, even though it doesn't look like it, guys. XLV actually really doing a great job of bottoming out. You can see how tough it is for the bears to push these lows, right? The bear moves down are getting weaker and weaker and weaker. Eventually, what we could potentially see early on next week is a recapture of this trend change. They have got it technically right now. If they can perpetuate this, right, you can see we're starting to move above our moving averages ever so slightly now. If we do get this breakout, it means your daily bounce is underway, and it'll look something like XLF financials, right? So the bounce, looking for the bounce, and they are bouncing from the correct location right now. This whole green box is big previous all-time high resistance. It is now acting as support for the bulls, and we're obviously bouncing from our prior weekly higher lows as well. So if the bounce does get underway here, guys, we have to measure the size of the bounce in relation to our last leg of selling right here, 140.6. Now, it's not too clear, but we did set lower lows here. So this is the actual pattern. This is the third leg down. I know it's not pretty, but this is the third leg down right here. It is not the one right here. So healthcare actually has a greater chance of engulfing this move. If they can engulf, guys, it's going to look very good to set the bulls up for the daily trend change and potentially start recapturing a little bit of this weekly. But the damage done on the weekly is fairly heavy, so we could just be expecting lower high, and then it'll be up to the bulls to protect these lows back here. If we do revert back down here in the month of May, need to see the bulls hold this. If ever in the event this is the lows, obviously if Monday and Tuesday are bad days, we can just roll this over into further consolidation. Then the last line of defense will be 137.04. which is your weekly higher lows, or prior weekly higher lows, because we are currently in a weekly downtrend. So keep a close eye on that. On the monthly, guys, monthly still relatively healthy, just looking for a monthly higher low for further trend continuation. So all is not lost on healthcare. Now let's get into semiconductors. So if the break of this 213 was not very clear in the last 2 days, it is definitely clear right now, right? So now where are we coming into? We're coming into the gap area after the NVIDIA earnings, this whole region right here. Clear daily downtrend, extreme sell-off right now. Look at this. First daily oversold conditions after an all-time high. Where has that happened in the past, you may ask? Well, great question, guys. Thank you very much for asking, right? New all-time highs over here. When did we get our first daily oversold conditions? Back here in September. Let me zoom in on the chart just so you guys can see it more clearly. When did we get our first oversold daily conditions? Well, as a matter of fact, late September. And what happened thereafter? Well, you got a very juicy bounce, 8% to the upside. Where did it happen prior? Well, I'm glad you asked, guys. Where did it happen prior? After our highs of 2021? First oversold daily conditions after an all-time high, right in this area right here. And what happened thereafter, guys? Well, I'm happy you asked again. Bounce 8 to 10%, right? So we could be expecting somewhat of a bounce to be coming on SMH soon, especially since we're coming into big area of support right here, 196, 195. If we do get that, guys, that bounce underway, we will just be looking for a lower high, and then remains to be seen, obviously, how high is the bounce going to get? That'll give us a better indication. Can the bulls reset for the daily trend change, or are we just maybe due to set the lower high, encounter resistance up here? The 213 supports, now resistance. Your 50-day EMA is right here in red. Your short-term moving averages are above here as well. So if we just move into here, these may all curl down to this area right here, may just be too strong of resistance for the bulls to break through, and may just roll over for another daily leg of selling, which would just be continuation of this weekly downtrend at this point. And as a byproduct of this weekly new downtrend right now, healthy monthly consolidation, in my opinion. The max pain level at this point for the sell-off on SMH could possibly be in the 175. That is your 12 EMA. You can see we've tagged that on the prior sell-off last October, and the top to bottom for semiconductor sell-off was about 15%, and the sell-off all the way down here would be considerably more at 26%. Obviously, the fear narratives are a bit high right now too. So if we do get that extended sell-off crush, that, in my opinion, would be maximum pain for this index. I'm not saying we're going to get down there. That would just be a heavy area, in my opinion, where the bulls would put up a heck of a fight if we do come down there. Keep in mind, the MACD has just crossed, so we could just do something like this where we slowly trickle down into this area maybe over the forthcoming weeks. Now, lastly, moving into the Russell, guys, Russell up 0.16%, but the Russell is just really weak overall as a byproduct of higher for longer interest rates. So your daily downtrend simply continues at this point, guys. As soon as we can get the Russell still with no hourly trend change, when we get the hourly trend change similar to everything else, guys, we are going to be looking for the size of the daily bounce in relation to 202.77, but that's a long ways away, guys, and there's a lot of resistance in our way. Your moving averages are there. We're also now below this red box of resistance, which was, a year and a half's worth of resistance. We're back under that now. And we have also lost this weekly uptrend, losing these higher lows. So any daily bounce, in my opinion here, guys, even if we do recapture a semblance of a daily uptrend, I think it will just be met by weekly bears that are very, very strong, set the weekly lower high, and maybe even flush, guys. The Russell is going to be bogged down as a byproduct of high interest rates, higher for longer as a whole. Moving into the Dow Jones at this point, guys. So the Dow Jones also displaying some of the same symptoms as the rest of our indexes, but the Dow Jones, guys, the bounce is already underway. And take a look at this, right? First, daily oversold conditions after an all-time high. The bounce is starting, and you can see that best on the hourly, right? Curling over the hourly, starting to recapture your hourly trend change. If we can maintain this into next week, your bounce will get some legs to it. And then we'll be looking, how high can the bounce get in relation to our most recent lower high, which is this guy right here, talking about 38,900. Let's call it 39K for all intents and purposes, right? Going to be looking for the size of the bounce. However, even if we do get a sizable bounce, right, 50, 60% plus, even if we get the 618 bounce, guys, it is just looking for a lower high, and fittingly, the 61.8 level is exactly at this resistance line, 38,500. Your moving averages are there as well, so could just be expecting lower high, then it'll be up to the bulls to protect these lower lows, reset the daily uptrend. If not, we are just going to roll over for further daily downtrend and further potential weekly consolidation as well, maybe even the setup of a weekly downtrend. That could just bring us into extended monthly consolidation. The point where I think it's going to stop is your previous all-time highs, talking about 36,800 down to about 35,600 as a whole. So hopefully that has been helpful, guys, in terms of determining where the indexes stand and can we be expecting a bounce soon? And when we do get the bounce, what is the expectation? I hope that I was very clear that the expectation is not this. We are always expecting a lower high, and then we will gauge how the bulls will react afterwards. Will they be protecting this or not? And that will all depend on the size of the bounces across all of your major indexes. And earnings are obviously heavily going to contribute one way or another in terms of the size of those bounces. Can they get more legs, or do they just get undercut by earnings that just kind of tank even though they're good, right? So keeping a close eye on all that next week. Very interesting week. Let's move on to a little bit of crypto. So Bitcoin not really doing much of anything right now, kind of just consolidating sideways. So still in the context of this daily downtrend, we'll be looking for the bulls to recapture this. If they can break 67,000, we can have a potential move where we reset the daily uptrend and potentially move higher. But Bitcoin being somewhat of a risk-on asset, we are also in a weekly downtrend. The fact that it's a risk-on asset and the risk-on trade hasn't been really popular recently could hinder Bitcoin's ability to really start regaining the levels. The likely scenario in my mind is as your S&P and QQQs continue to correct, maybe over the course of the next few weeks, I do think that Bitcoin largely will just maintain flat. The worst area that we could potentially dive into is maybe 55 down to about 57,000. But so far, I'm not seeing some accelerated sell-offs over the course of today. You know, the Israel-Iran news rocked crypto last night as it was happening, but you can see crypto, as a matter of fact, ended green on the day as opposed to the rest of our markets ending red. So potentially these headlines are having less and less of an impact each time they happen, unless, of course, we see some considerable escalations, right? So far, seems to be just a game of cat and mouse, right? People aren't really, although it appears that tensions are escalating higher and higher, it's really not that bad in the grand scheme of things here, guys, right? Iran actually, didn't say that they were hit by Israeli missiles, even though Israel did confirm that the missiles did hit their targets. So Iran kind of downplaying the whole situation. Maybe they just don't want to go back and forth with Israel because they may know that, especially with, the United Nations coalition forces and whatnot, with NATO and all that stuff, they may feel that they're a little bit outclassed and outgunned currently. I don't want to comment on the political standpoint of the whole situation. That's not the point of the channel. The point that I'm trying to make is that these headlines, as they occur, if the tensions don't escalate further and further and further, if we just get little tensions here and there, similar to the ones that we've been having, and I'm not saying they're not important, don't get the wrong impression. They are very important, and my heart goes out to people in in all countries affected, obviously, right? It's just to say, how are the markets reacting to these news pieces when they come out? The first instance, I can bring it up on the SPY, right? first instance 2 Thursdays ago was extremely brutal. Again, last Monday, for the highlights that we had last weekend, right? The tensions mounting, fairly brutal. But today, as a matter of fact, we actually opened and we weren't that bad as a whole, right? We opened the morning recapturing a lot of the damage that was done from the news headlines overnight. What brought us down is just renewed considerations for the semiconductor industry kind of slowing down, right? And that's why we had most of our major losses on the course of the day. Right, on semiconductors right here. That was your major reason for the downside today. Not so much the war headlines. Those were kind of alleviated overnight. And Bitcoin as well, guys. Fairly huge event for Bitcoin too today, right? We had the Bitcoin halving event. So if you guys don't know what the halving means, this is basically your Bitcoin blocks, right? These are all transactions that are going through on Bitcoin. They usually happen every 10 minutes. And who solves these transactions? Those are what you call the Bitcoin miners. And obviously when the Bitcoin miners process transactions, you can think about these as banks or credit card companies, right, that have to process transactions. Your Bitcoin miners, all they do is they process transactions. The reason they call it the halving is because these miners are rewarded in Bitcoin for processing these transactions. But every 4 years, the difficulty in processing these transactions goes up by 2x, meaning the rewards that these miners get for processing these transactions go down by half. So what happened on the halving? You can see the halving block was right here in gold, and now we're well beyond that. It happened roughly at around 8 p.m. Eastern Standard Time tonight, and you can see, look at this surge of transactions around that halving event mark, and now it's kind of tapered off a little bit, but the fee is still extremely high. Usually to put through a transaction on the Bitcoin network, guys, you can stand to pay between $5 and $10 in normal market conditions. With the halving event, you can see the fees right here, guys. $200 to send a single transaction through Bitcoin right now. Very, very high fees. It just goes to show you the participation of in the network right now for the halving event. Very, very good rollout for the network as a whole, guys. So quite happy about that. And everybody in crypto is relatively happy about the way it's played out so far too. A lot of gains to be made if you know what you're doing. So moving on to Ethereum. Ethereum as well, kind of caught in this extended daily downtrend right now. So we're just going to be looking now. We're coming into a little bit of a bottoming out process, right? Coming into maybe some engulfing moves. You can see Ethereum bulls are trying desperately to reset some sort of hourly trend change. You can see this best on the 4-hour, right? Bottomed out after the Israel-Iran headlines last night, trying to reset the 4-hour. So as soon as we get this new hourly trend change to the bulls, your 4-hour trend change will be complete as well. And the daily trend change can potentially happen, guys. We're going to be targeting this guy right here, 3274. Get me as close as 3274 or blow past it. The bulls have a good chance of resetting this daily and maybe putting an end to some of this weekly slide. And then on the weekly, we'll be looking same thing. How high can the weekly move get us to be able to reset this into a weekly uptrend? Because now we're stuck in a weekly downtrend, which means that we're in healthy monthly consolidation. The area that I'm targeting, once again, 27 down about 2,500 seems to be very, very juicy area to be picking up some Ethereum if ever the markets don't cooperate and continue selling off. So hopefully that was helpful for all of you guys as well. Now, moving on to Apple. So this video is getting a little bit long. Don't know if I can do the portfolio update or if I'm going to have to do it in a separate video, but I really want to spend some time telling you guys the strategy. So I may just include it in a separate video. For now, let's just cover our big tech stocks, shall we? So Apple down about 1.22% on the day. Not a very good day for Apple. And unfortunately, guys, we cracked our previous lows. Yes, Apple is now at the lowest level it's been since April, fittingly, of last year. So pretty much 52-week lows at this point on Apple. Very unfortunate for them. The bears were just too strong. Big engulfing move. Apple, unfortunately, not yet daily oversold. Apple, in my opinion, will bounce as a byproduct of the overall market. Earnings for it, not yet here until Thursday, the 2nd of May. So let's say we get daily oversold bounces from QQQ and SPY, and the bullish bounces pour into Apple. At this point, guys, the daily drop, I will not lie, is considerable. So at this point, we're just maybe expecting a lower high into potentially lower low conditions as well. If the market has that daily bounce on, let's say, take QQQ for an example, right? If we just have a lower high and then revisit lows, well, Apple is likely going to follow the exact same pattern, right? Coming down, lower high into these lows. Keep an eye on this level right here, guys. 166 is going to be resistance now. And also this level that we just broke through, that very solid 168, is also going to be resistance. So if the bounce is relatively weak, we can expect the bulls to maybe get stopped out here, 168, and then it'll be up to them. Can we save these lows? prior to earnings and kind of get into a little bit of a tightening range at the lows here, and then all eyes will be on earnings. That will be the best case scenario. If Apple just falls before earnings, of course, well then daily downtrend simply continues. Weekly downtrend, extended weekly downtrend at this point, will simply continue as well. And our next area of big support for Apple is going to be in the 155, 150 range. I'll remind you that is the 200 weekly moving average. Apple in the last 15 plus years, guys, has not lost the 200 weekly moving average ever, right? So that is going to be a very, very, very juicy opportunity for Apple. So get your money ready. If you've been looking to buy Apple, guys, this will be a heavy, heavy, heavy area that I'm going to be playing Apple at. Most likely leap call options 1.5, 2 years out, and I'll probably be throwing anywhere between 10, 20,000 at it, all right? Just to give you guys an idea. Moving on to AMD now. So AMD unfortunately, guys, getting hit as well with the rest of the semiconductor industry, but AMD is doing something that Apple, right? Apple, I mean, you saw it here first, right? Here's another example, right? All-time high, first daily oversold conditions on Apple. What happened? You did get your bounce, right? We retested and then we bounced again, but you got your initial bounce. Now it's not the same because that's no longer first daily oversold, right? Now we've come significantly off the all-time highs. AMD, however, does fulfill these conditions. All-time highs, and now look, what do we have here, guys? First daily oversold conditions coming into the 200 daily EMA. 4 hour is crushed, 1 hour is crushed as well, right? So we can be expecting a bounce at this point. Take a look back in AMD's history. If we go back to prior all-time highs in 2021, the last time that this happened, I don't want to do too many of these. You guys will get the point, and you'll probably do it on your own charts. All-time highs, first daily oversold conditions after the all-time highs started here, dipped a little bit more. I agree with you, but 2022 was a rough period in time. Dipped a little bit more, and then how much, even if you got in here a little bit early, guys, the bounce size was significant, 17%. And if you somehow pick the lows, guys, it was a 25% bounce. Now, did they just set the lower high and then try to get the daily uptrend and then roll over further? Yes, but at least we got the bounce. This is why I'm so interested in playing these companies for first-time short oversold conditions on the daily, right? Think short put plays, right? Short put plays. We may be able to get, the 140s, right? I know AMD has earnings pretty much in 2 weeks' time. This could be a very, very easy in and out swing trade where we target the 140s. When we get our oversold conditions bounce, you just simply exit the trade prior to the end of the week. So could be a very juicy trade opportunity, guys. I may even do 2 weeks out on AMD for that specific purpose. Going to look to bring as much premium forward after this bounce happens and put all that premium in my pockets. So AMD still in the context of a daily downtrend. As soon as we do get that bounce, guys, we are going to be looking for a lower high naturally because it is such a heavy daily downtrend. Looking for the lower high, anything pretty much under 165.15, just going to be for a lower high. Maybe for daily downtrend continuation, but we are going to get that bounce soon. The only problem is we're dealing with overhead resistance. The moving averages are right here, and this green box, which is 164 down to about 158. I'm sorry, I moved a little bit during my explanation. That is your previous area of your all-time highs as well. That zone is going to be acting as resistance. So we'll take this one day at a time on AMD. On the weekly, definitely a very, very healthy weekly downtrend for the bears right now. We're coming up to pretty much the 140 level that I was referencing the past couple of weeks, which is the next big area of support for AMD. Right now, just continued monthly consolidation for the stock. There was a lot of froth, guys, built up, in the whole semiconductor industry at this point. So AMD started the sell-off. One of the first companies to start the sell-off. They're now down 35% off the peaks. Now the rest of the semiconductor industry will be pulling back, right? So could we maybe be expecting AMD to bounce first out of the bunch? Well, they're definitely manifesting some of the first conditions that we look for to look for these big bounces. Moving on to Amazon at this point. So Amazon down about 2.56%. Amazon losing a very big level, guys. That 178 zone, we've now lost it. We've now lost this daily uptrend as well. Loss of the higher lows. Bears in full short-term control, really coming down, but we don't have the first daily oversold off of all-time high conditions just yet. That trade is not yet on the table. Right now, what we're dealing with, guys, is our first area of resistance coming right down here, 172. 172, very important level, guys. It is your weekly higher lows. If Amazon loses this level, they lose the weekly uptrend, and the bears are set up to potentially roll over and set the weekly downtrend, which would bring us into further monthly consolidation on Amazon. Now, that is looking a bit too far in the future, but it's just to set the expectation. Now that the bears have put in an engulfing move, could be expecting the lower high, moving average as a resistance, 178 area also as resistance, could be looking for the lower high into maybe lower low. We do have earnings on Amazon Tuesday, the 30th of April, 2 Tuesdays from now, guys. So keeping a close watch on Amazon. Those are just a few of the scenarios that I'm expecting. My all-time buy situation for Amazon, if we can fill this prior earnings gap because of continued market weakness, 160 area, I'm extremely bullish on that 160 zone, guys. I will be going fairly aggressive and fairly large on Amazon if we do come down to those levels. So keep a close watch on that over the next coming weeks. Moving on to Google at this point. Google down 1.11%. Give me a quick second. You guys know the drill. It's either Amazon or Google where I get my coffee sip. So Google on the day down 1.11%, right? So daily downtrend, unfortunately set by Google. So they lost this beautiful daily uptrend that they had going for them right here. Now daily downtrend confirmed. So over the course of the next week, if this daily downtrend simply continues on Google, we're expecting continued weekly consolidation. However, Google has a ton of space. Anything above 132, just going to be looking for a weekly higher low for further trend continuation on the stock. Earnings very short from very soon on next Thursday, guys. So I do expect price action on Google to be fairly muted. I mean, it doesn't really have many other big tech stocks before it. Most of your big tech earnings are on the Friday with it. So Microsoft and Google the same day. The only one that we have before that is Meta. That could potentially be somewhat close to Google because they obviously both run advertising businesses, right? So that could be one that affects Google prior to its own earnings. But I'm really not expecting a break of significant levels. A significant level prior to earnings would be around the 150. So I'm not really expecting a break of that. Can we come down into that level? Yes, sure. And we will take a look at that prior to earnings to see how the expectation is set up here, guys. But Google has created so much space. I'm looking to personally play. If we do get after earnings, even before earnings, guys, I may just play. If there's enough volatility in the stock, I'll probably be looking for the lower 140s. If I can get lower 140s on Google, guys, I'm going to be going relatively aggressive and relatively heavy as well. Just looking for the monthly higher low for further trend continuation. And the valuation on Google is very good right now. Now, moving on to Meta, the next one, Meta. So Meta obviously losing the, they're not quite losing it, but in jeopardy of losing the big area that we've been talking about for the last month. So daily downtrend coming hard into this area right here, down 4.13%. No fault of its own, really, just a byproduct of the overall markets coming down. And Meta is now in jeopardy of losing the weekly uptrend. Meta has not lost the weekly uptrend, guys. Wow, you'd have to go back a long time, right? You'd have to go back really to the extent of their sell-off back in 2022, because even though we were in some weekly consolidation right here, they never lost the weekly higher lows at any given point, right? They just put in a nice engulfing move. The bulls were able to recapture it right away. This would be significant, guys. If we were to lose this, let's say, into their earnings, which are next Wednesday, not going to be looking good. If Meta's earnings are potentially underperform and they're below this level right here, guys, well, we could just be expecting an extension of this daily downtrend, an extension of weekly rollover into further consolidation, guys. And if we lose this weekly, right, we may just be heading into monthly consolidation as well. Meta really hasn't had monthly on consolidation since last October either. And the extent of the sell-off top to bottom last October was about 16%. Now from the top, we're already down about 9%. So we'll see how earnings are on Meta specifically. Meta, as I've always said on the channel, guys, I'm really looking to fill as much of this prior earnings gap as possible. If for some reason their earnings are just not well received and I can see 420, that's the level that I'm probably going to be looking to play Meta next week. Short puts, 420, $400. If I can get some good premium down there, definitely will be highly interested for that. So Meta pretty much on the chopping block right now. If we lose this level, we lose a lot of prior support, guys, and it's not going to look good. It's going to look like a weekly engulfing move. Just sets the bears up to get the weekly downtrend potentially in motion for extended monthly consolidation, maybe through the month of May as well. In the event earnings are bad. Obviously, in the event earnings are good, guys, well, we can just undo a lot of this damage. Just recapture these levels, engulfing move after earnings, and you'll have a green weekly candle next week, as if this week really never happened. So far, they have not yet lost the lows. So next week will be crucial. Moving on to Microsoft now at this point. So Microsoft also 1.27% of the downside. Microsoft this week, right? We've come up from being above our range of consolidation with healthy amount of room to lose. Now at the lower end of our range of consolidation here, guys, coming in with very heavy momentum. Microsoft, not yet our daily oversold after first all-time highs, right? So first daily oversold conditions after all-time highs, not yet, and we may not get it really before earnings. Earnings are next Thursday, so not a lot of trading left before Microsoft earnings, right? At this point, need to see if the overall indexes, guys, next Monday and Tuesday get a little bit of a bounce. Microsoft's going to create a little bit of a cushion between it and these lows. But we cannot lose these lows, guys, because if we lose these lows, some of our larger form timeframes are in jeopardy right now. So right now, obviously, Microsoft, in the context of this daily downtrend, if we do get a bounce, I'm just expecting maybe a lower high, and then it'll be up to the bulls on earnings to protect these lows after those earnings reports. But definitely now to the upside, we have the same resistance as we pretty much had back here. The top end of this range of consolidation, which is roughly 415, and all of your moving averages, including the 50, which we were above prior, including the 50. The 50 AMA, this red line, has not really been resistance from Microsoft since the last fall sell-off. So it remains to be seen, guys, where we stand prior to earnings. If we flush below and earnings are bad, right? If we flush below and earnings send us even further, which would surprise me, guys, that would be an extended weekly sell-off at this point, right? Weekly downtrend potential coming into these lows, and that would mean heavy monthly consolidation by Microsoft. But at that point, I may get my buy opportunity on Microsoft, talking 375 down to about 350. This pocket right here is what I'm targeting. Top to bottom, that would be a sell-off on Microsoft about 15 to about 20% at maximum drawdown, which is exactly what we got last fall. Last fall, we got about 15%. So that would be a healthy correction for Microsoft, in my opinion. So it remains to be seen if the bulls can protect these levels before earnings to give themselves the most amount of cushion, guys, that even if earnings are slightly bad, and Microsoft usually never falls after earnings by more than 3-4%, kind of like Apple. So that if they can get back up here Monday and Tuesday, or even Monday, Tuesday, Wednesday, and give themselves the cushion, that would give them a nice cushion of about 4% prior to these earnings. So that is the best case scenario. Obviously, worst case scenario is dipping below these levels prior to earnings, and then just, using this area as resistance and then getting the earnings flush. So hopefully that was helpful on Microsoft. All right, now looking for Netflix. So Netflix down 9% on the day, largely due to their earnings, right? So earnings, we covered them on the channel yesterday. I thought that they were relatively good. So very surprised that NVIDIA had 9% drawdown, but now we're coming in to a very pivotal level, guys. This 550. So we obviously cracked below our now 575. The 575 was an important level, guys. It was the previous resistance back here in 2020 and 2021. We got above it, healthily above it. Now we're in jeopardy of losing the weekly higher lows. So this is a massive one leg up of your most recent weekly uptrend. If we lose this, guys, unfortunately, we will be losing the weekly uptrend, and we can potentially open up the doors to set the weekly downtrend into maybe the month of May as well, if the sell-off does continue. One thing's for sure, the bears are in full control at this point, right? So as soon as this daily bounce finishes, or as soon as this daily drawdown rather finishes and we get our daily bounce, need to measure the size of the bounce in relation to 622. Get me high enough, guys, we could just recapture the 575 and be able to reset the daily uptrend and act as if no harm was done on the stock. But come too low after these earnings and then get your daily bounce, we may just get rejected by the 575 and just perpetuate this daily downtrend and perpetuate weekly downtrend activity as well, which will just be a very healthy monthly higher low for Netflix. Anything above 346, just looking for that monthly higher low. Target this green box. You can see how much it's been used as support in the past. Should be coming up as support as well. 500 down to about 450. I know that's low, guys, but keep in mind Netflix last fall sold off 28% top to bottom. This would be an exact same sell-off of roughly 28% at the lowest point, talking about 450. So 500 down to 450 is the area where I also will be looking aggressively to play Netflix stock. Moving on to NVIDIA at this point. So NVIDIA down 10% on the day. Is the sky falling for NVIDIA? No, not really, guys, but this is one of the biggest drawdown days I've seen on NVIDIA in a while. Take a look at this day right here. Top to bottom, even this day was about 10%, right? Friday the 8th of March. So this candle has been seen in the past. The problem is that now, guys, we are definitely in a confirmed daily downtrend at this point, clear as day at this point. So as soon as we do get this bounce, the bounce may be coming soon in my target area. 750 down to 700 is going to be that range where I do expect the bulls to put up a bit of a fight. If we do start getting that daily bounce, however, guys, we're just going to be looking once again for the lower high, and then we'll be looking, can the bulls save these lower lows? It all depends on the size of the bounce when it starts manifesting, right? So going to be looking for that lower high. And we also are looking for first daily oversold conditions, guys, after a new all-time high. You may ask, when has NVIDIA done that in the past? Well, great. I'm glad you guys asked because it happened just last year. As a matter of fact, take a look when we were at these all-time highs back in pretty much last August, right? Take a look at this. All-time highs coming into a heavy little sell-off. First daily oversold conditions on NVIDIA was met with a nice, juicy little bounce trade. So that's what I'm expecting as well, guys. Coming up on a juicy little, we have support area, daily oversold conditions soon. So a few more days will send us into deep daily oversold conditions. And this is the area where we could be playing a little bit of a swing trade on NVIDIA. But I'm not expecting this, guys. Just expecting the lower high, and then depending on the size of the bounce, it'll give us the best idea whether or not the bulls have created enough space to set the higher lows, regain this daily uptrend, or if the bounce is too weak and we just start rolling over, start regaining some of these lower levels here, right? And just can come further into this weekly consolidation. So far, this is just looking for a weekly higher low, anything above 469, just looking for that weekly higher low. Now look at the weekly, guys. Finally, after being extended on the weekly for 4 months, we're now back to levels that are more acceptable. So this is a very healthy sell-off on NVIDIA. The MACD is crossing, so we could be expecting a little bit of weakness here, maybe through the month of May as well. Weekly downtrend, which would just be very healthy monthly consolidation. Maximum area of pain, in my opinion, for this stock, similar to times in the past, has been touches of the 12 EMA in the context of bull markets, right? So almost had it here. Could we come down and touch the 12 EMA? I know it's a long way away, guys, but this stock has run a lot. That would be a sell-off of 38%. The extent of the sell-off in October was only about 22%, right? So, but that would be, if you ask me, maximum pain. That's why they call it maximum pain, guys, because it's such a heavy area of drawdown, right? So we'll see how NVIDIA stock evolves over the next coming days and weeks, but definitely a little bounce trade opportunity coming up shortly. Moving on to Tesla at this point. Tesla, guys, not looking the best, right? So $147 on Tesla, down to 1.92% on the day as well, coming dangerously close into earnings, right? So Tesla, unfortunately, similar to yesterday, losing our last line of defense, our new area of support now becomes, guys, we're going to have to move this green box down a little bit now because the area of future support comes pretty much at these lower 130 levels, right? So 131, 130 is your next area of support. And the next area of support, guys, well, you don't really want me to mention that number because it's relatively low, right? So we'll first deal with 131 if we get there. One thing's for sure, the bears are in full control of this chart. The weekly downtrend clear as day, daily downtrend as well. And I'll say it again, if you guys think I'm too bearish on Tesla, guys, it's not a Tesla problem. I like the company. They're just going through some cyclical challenges right now, which is hindering their demand, largely due to interest rates. So now, guys, we're even breaking down below our downtrending channel line, so it's not looking good. Earnings, in my opinion, guys, earnings is going to be one of two things. It's going to be either a catalyst that's going to be able to save the bulls and give themselves enough space with a bounce that's going to come, if we can come up to 175, get me as close as 175 after an earnings pop, and we can maybe talk about recapturing this daily uptrend and really start putting some work in to start recapturing this weekly uptrend as well. However, if it is the all-time earnings flush for Tesla, if the earnings call is a disaster, if the numbers are bad, free cash flow, EPS, margins, everything, right? If we have slowdown in all the aspects and the stock drops, let's say 10% on Tuesday, which would bring us right down to the 130s, after that earnings day, guys, please give it some time. If it's the absolute crush, give it some time because you have to give time to retail to capitulate, all right? What we're looking for on Tesla at this point is the exact same trade that we had in 2019, all right? There was a trade back here when I used to first follow Tesla. There was a trade where in 2019, late 2019, the stock also dropped in a short amount of time, 52% over concerns that the company's growth was finished, all right? They're done. That's the extent of Tesla's growth. That's it. They're done. Analysts started throwing in the towel. Retail started throwing in the towel. The rest was history. Now, obviously, we're not expecting a tremendous rally like this on Tesla in the short term, right? However, it will be notable to us after earnings, if it's the absolute crush, to gauge retail sentiment. If you go on Twitter and you go everywhere, and after their earnings, analysts start throwing in the towel, the media starts throwing in the towel, retail investors that have been ultimate bulls for the past 4 or 5 years, if they start throwing in the towel as well, guys, that is going to be the time where we can possibly enter for some swing trade opportunities as well. One thing's for sure, I'm going to throw out a number out there. If ever I see on Tesla over the coming weeks, coming month, sheer capitulation from all sides, and we come to $100 on Tesla. I'm not saying it's going to get there. I'm saying if, for ever which reason, it gets that bad, that is where I'm going to make a fairly large play on Tesla myself, because at that point, guys, the valuation, even in light of their declining revenue, declining EPS, declining free cash flow, and declining demand, at $100, the stock becomes very, very cheap on a fundamental basis, and it would be would be very interested in making a play in that level. Now, moving on to Palantir, guys, going to do these quickly. Sorry, it's coming up on a very long video. Don't think I'll have time to do the portfolio, guys. Unfortunately, I'll do that. I promise. I'll do a video on it tomorrow with the updated strategy moving forward, because I want you guys, those of you who are willing to play, I want you guys to get involved in this because it's a very good learning experience. Palantir now, extended daily downtrend, coming to our area, guys. That's no secret here. Looking once again for the size of the bounce. When the bounce does happen, just looking for a lower high, and then it's up to the bulls once again to protect these lows, right? So looking for that bounce. Still daily oversold conditions right now, but it's not the all-time highs. It's 52-week highs, which give us a good probability that this trade is going to work as well, but it's not as high probabilities as an all-time high coming into first daily oversold, okay? So coming into our area of support, guys, this area of support is obviously one I've mentioned for weeks at this point on the channel, 2150 down to 19. I'll be looking to pick these levels at the 19. Prior resistance, going to be support acting for the bulls right now. Couple that with daily oversold conditions, and we could end ourselves up with a nice little bounce. The bounce, however, will just be for a lower high, and then we will evaluate the size of this bounce and the overall market conditions to gauge whether or not the bulls can set the higher low and reverse this, or whether we're just due for an extended weekly, daily further leg of selling down. Big resistance level above us, 2315 horizontal line, and your moving average as well. And obviously Palantir still trapped in this weekly downtrend too. So not looking the best for the company right now, but at least we can find some solace in saying that they're coming in to one of our stronger areas of support. And I will be very interested in playing Palantir, guys. $19 is what I'm really giving this. I'm being patient with this one, right, guys? The MACD is just now crossed on the weekly. The overall markets are bearish, so I'm not really feeling the urgency to play Palantir right away. Even if we come down even below this, guys, right? $18, looking to play anything in these lower levels. I think it's going to be a very good buying opportunity, guys, especially if you're looking to hold Palantir for the long term. Moving on to PayPal now. PayPal down, or PayPal actually up on the day, 0.34%. So PayPal coming down hard if we take a look at the daily as well, right? PayPal really with an extended daily downtrend at this point, coming to these lower levels. So if PayPal can get a bounce trade underway, guys, going to be looking, how high can we get in relation to $64? Get me as close as possible to 64. We have a chance at resetting this into a new daily uptrend. But fail these moving averages right here, fail our overhead resistance at 63, could just be looking for another leg of daily downtrend right now. And then we need to look at the lower levels, guys. $61, $60 will be the next areas of support at this point. And even on your weekly, guys, weekly, not looking the best here, guys. I'll be honest with you. We're coming into an area where the bulls really have to put up some defense, right? The bears have taken back 61% of the move. So if anything, guys, the best case scenario for the bulls right now with such a heavy take back from the bears is a tightening range. Unfortunately, very tough to V-shape a 61% retracement by the bears. Usually you would see that in two steps, if anything, or worst case scenario is the lower high into lower low weekly downtrend. So we'll take this one day at a time on PayPal. No rush as well for this stock. It's highly exposed to interest rates and just highly correlated to the rest of the market. So if the rest of the market continues in these daily downtrends, I'm not looking to jump the gun on PayPal, guys. If I can find PayPal, although we have structure right now, if we lose structure and we come down once again into our high $50 range, 58, 57, 56, I will reevaluate down here. I'm just being excessively patient here, guys. As I've said before, PayPal is a good stock. Do I think it's a good value stock? Yes. The fundamentals are improving. Yes, it's a recovery story indeed. But is it as high of a conviction trade for me as other ones such as Apple, Microsoft, Google, Amazon, NVIDIA, stuff like that that's coming down? No. I will put those other big tech names first and foremost in front of PayPal for any trades coming up on this most recent on this upcoming downtrending cycle. So hopefully that was clear for you guys. Hopefully you guys have appreciated the video as well. It's about an hour and 20 into the video, guys. I'm extremely sorry, but I figured, after such a heavy week of selling, I have to breathe some life into everybody. Because I've seen the Twitter timelines as well, guys. Everybody is really panicking right now. So I hopefully after our guidance that we were giving in late February and early March, hopefully we're able to take some swing trades off the table. Hopefully we're able to write some covered calls and raise some cash on the portfolio. So now you have some times and some opportunities to be buying these dips. As I've said, I don't believe there's any urgency to be buying heavy dips right now. Let's say if you have $5,000 to invest, maybe you can put in $1,000 into it now. Then you wait for the earnings week to evolve. If you find some other companies that have dipped even lower into next week after earnings, you can put $1,000 more, guys. Just start dollar cost averaging, but don't send the full portfolio on this dip right now thinking it's the bottom, guys. It can just go trickle down lower through the month of May as well. As we saw this multi-month sell-off back here, it can be a choppy road until we find the bottom as well. So just please keep that in mind. Right? If you enjoyed the video, consider dropping a like. Really appreciate it for the channel growth. If you also, if you enjoy these videos and you appreciate the content, consider subscribing to the channel. We do these videos every single Monday to Friday. And as usual as well, guys, if you have any questions whatsoever, please leave them down below in the comments. If you want me to look at a specific stock, a specific options play you're looking at, guys, leave them down below and I'll answer them. Tomorrow, I will put up a portfolio update with my trades that I've done and also the trading strategy that I'll be adopting with this heightened volatility and these earnings plays coming up in the next couple of weeks. Very, very interesting strategy that I rarely use. But when a combination of things come together at the same time, it's a strategy that I like to implement. I did a lot of it last October as well, played out fairly decently. So this time I'm looking forward to do it as well. So hopefully you guys enjoyed the video. I will see you tomorrow and over the weekend. Take care and peace.